Doing business in Africa. You can't afford to be without Africa Investor.
It's a real honor and privilege to be before you. We think, as Africa Investor, as an institutional infrastructure investment platform working with sovereign capital and pension fund capital, that the time is now for us to really come with a different tone, a different message, and a different goal. If we're trying to mobilize $10 billion of institutional capital, then you're going to need to really have a different relationship, or we're going to need to have a very different relationship with a 300 trillion pool of capital, and we're going to really need to think about how we can recharacterize the risks, apportion the risks in a very different way. So I sit on the high-level water panels task group. I've been on there since its inception, and I really enjoyed serving in that particular role. And what became clear when we engaged our institutional investment colleagues is that our mandates are really to return capital to our members or future generations. How can we reconcile that with a space that's really been dominated by a development mindset, when we think that long-term capital can solve development challenges when they are in the trillions? So we think that one of the key philosophies that we need to think about is, instead of trying to make investment developmental, we should be trying to make development investable, to the point where it can unlock the social as well as economic dividends on an aligned basis. So we have 4 very quick, concrete proposals that we believe can accomplish that in the water sector, that could unlock more than 10 billion a year from the 300 trillion pool of global institutional capital, both African pension funds and sovereign wealth funds and our global peers. We think we should really look at legally classifying water ecosystems from watershed protection and storage to natural filtration as national infrastructure assets that can be measurable with return on investment, and qualify them for the same regulated returns, protections and investment treatment as roads, ports, energy grids. We think this reframing is going to be very important. Secondly, we talk in terms of institutional investor-public partnerships as opposed to public-private partnerships. So we talk about how can we have long-term capital working with long-term assets, as opposed to perhaps some of the financing structures that are going to be very complicated for the government to be able to realize. And we call them institutional investor-public partnerships. We think we leave a lot on the table as government and institutional investors. Nature. Africa has $6 trillion worth of natural capital that we don't even put on our own government's balance sheets, that we don't securitize, and we have dependencies which affect our own strategic portfolios because of the ecosystem services. So we believe that there's an opportunity there to unlock over $900 billion for the continent, and about $18 billion each year between now and 2050 through institutional investor-public partnerships at the policy level that can unlock long-term institutional patient capital. And then finally, Chair, I suppose the other issue for us is we tend to invest in financial instruments, funds, more strategic platforms. So we believe that water is very aligned with that. It's happening around the world. Tens and hundreds of billions of dollars of private capital are already going into well-defined and regulated structures, and private capital is already doing it. So we don't have to reinvent any wheel. We don't have to be creative. We just have to perhaps let the development finance world understand that if they can't finance the scope and the scale of the need, they should probably let a balance sheet in that can do that. One of the opportunities we believe is that we should encourage committing to enabling scalable, tradable financial products such as water ETFs, exchange-traded funds, nature-linked bonds, and catchment resilience funds, backed by Task Force for Nature-related financial disclosures and other taxonomies. And these taxonomies are already linked to trillions of dollars of ESG capital. So the alignment is there. We need to be getting into alignment, and then we can decide the extent to which our development interests are balanced. But as I said at the beginning, we see ourselves as universal owners. So we are investing in the long term, and we need to see growth and development. So it's not even a question.
Most investors, they are in the main wanting a collateral. In other words, we look at blended financing. where there's a confirmation either by the state of the existence of traditional financing to grants, whether through rates and taxes, but then the difference, then yourselves, you'll be able to come in. Can you then share with us how it is likely for yourself to use blended finance, and give us one example of a project that you have used blended finance and you have done the investment on it in our own soil, Mother Africa?
Thank you very much, Chair. And again, whilst I love the question and I love all the enthusiasm around blended finance, blended finance was designed decades ago, and it was designed to solve a very different problem. It's got a very long tail that only now, when the financing gap has become so pervasive, that everyone's leaning on blended finance as if it's a panacea. And if the truth be told, blended finance has not really got the depth and the capacity to accomplish any of our goals. So I always wonder when we have these conversations, Chair, are we trying to get orders of magnitude in a broken model, or are we trying to create something new and solve the problem? So I sat on President Macron's Finance and Private Sector Task Force. We had to look at this for the new Global Financial Pact Summit. When we sat down with all of the multilateral development bank leaders and the investors, what we found out was that if you bring all of the blended finance first loss capacity together for Africa as well as for emerging markets, less than 10% of what we actually need is available. So the question should rather be, how do we fix the 90% gap that blended finance cannot? And I think that's where we're really trying to open up our minds to say, how can private capital have a different relationship with the public sector so that we can have more programs, more programmatic, more long-term, more strategic portfolio-based relationships so that we can actually so private capital can de-risk private capital to solve the financing and the investment gap. And I think if we're talking about mobilizing capital for a sector like this, we as I say to my colleagues, we spend 90% of our time trying to solve 10% of the problem and less than 10% of our time working with people that can solve 90% of the problem. So blended finance, just so that we also understand, because I know that a lot of colleagues are leaning on blended finance because we don't really have much else. Blended finance is part of whilst it's good and whilst it's got some transactions done and we can throw some good names around, blended finance also, if not sold properly, contributes to increasing the cost of capital because it gives the perception that geographies that need blended finance are going to have a loss. Even before we've talked about the transaction, we're explaining who is going to take on board the loss.
What's in the pipeline? How many projects are you looking at? What value for this continent? I'm sure we're not doing a scam, Chavo. We're not just talking. There are those that are already in the year under review. There are those that are already in planning, just to share, just at a high level. Not about the 8, but on the current work that we are supporting water and sanitation. And those that are at a stage where decisions will be made very shortly.
I think fundamentally, we have to relook at the types of questions that we ask. We're currently looking at, and I'm going to give you a contextual example, Chair. We're currently looking at $3 trillion, for example, that's required for our nationally determined contribution projects. Those projects are worked on very hard by ministries of environment that don't have project finance expertise. And then the private sector is blamed for not financing or not banking or not investing in unbankable, poorly designed projects that have been funded with MDB technical assistance. What we say, sir, is that in our own portfolios, we have private sector companies that have the technology, that have the expertise, that have the local presence, that can do the large-scale projects that we can finance because they're already diligenced, but they're not allowed to present projects as NDC projects. If you allowed the private sector to play a leadership role in designing these water-related transactions in the same way that we are asking UNFCCC to allow private sector to originate NDC projects, which are linked into adaptation and water as well, you would see a much bigger pipeline, you would see money going into those projects a lot faster, you would see growth, you would see jobs, and you would see all of the people not being left behind. And so I think if we remain stubborn on we can only invest in projects that are originated by one party, and the other party has to invest in them regardless, that's where I want us to get to, sir.
1 minute. There were heads of state here. There are those who are representing the heads of state. There are financial developmental institutions that are here, private sector, policymakers, experts, and practitioners. They are all under one roof, gathered here in Africa on the southern tip in Cape Town, as they are about to go for matchmaking. What is one profound recommendation you want to give them in a...
I would appeal to our heads of state to have a direct engagement with the 300 trillion pool of institutional capital. We could form a compact. We could do it as part of this new Global Outlook Council. We could set some very tight deadlines and say, what can we agree on up until the UN Water Conference in 2026? And how can we bring our private sector expertise, our technology, our capital to design bankable and investable projects that we would actually backstop, so we're not looking for money. We start the conversation with balance sheets that can do the projects and change the conversation.
Doing business in Africa, you can't afford to be without Africa Investor.